Welcome back. You're watching Metropole Television. This is your economic review. Let's move on to the next area this morning. Now, the share buyback program for Nation Media Group that began on 28 June 2021 officially closed on September 24th. 2021 at 3 p.m. Now, the media company bought back more than 17.1 million of its ordinary shares at the local booze, equivalent to an 82.25% performance. Nation Media was earlier targeted to buy back 10% of its issued shares, equivalent to 20.74 million at the price of 25 shillings per ordinary share. As the news, let's see exactly how NMG has been racking up those numbers in 2021. And if you look at those half-year performance, then you will see that indeed the profit after tax was 285.2. That is for the first 6 months of 2021. But if you look at that turnover and then take it back to what they took in after profit after tax, then that's where the conversation point comes in. Let's cross over to the next one as well. Their share price trend, looking at exactly how the market has been reacting to that. Then up to 28th of September, because that ended on 24th of September, then indeed you can actually see you can't really put it somewhere in terms of creating that demand in the market, because yes, they dropped in that share standing to close in at around 24 shillings and 80 cents. That's of 28th of September. That's it. All right. Robert, we do know exactly what it means when a company goes back to buy its own shares. It's sort of reduce the outstanding shares in the boost to create demand in the local market. But for NMG, it hasn't really spurred that sort of curiosity on what is exactly happening in that particular stock.
I think before NMG, what first of all they realized was that they were trading at a gross undervaluation based on where they were expected to be at. So they looked at also their books and they realized that they have significant cash, of course, to carry out this transaction. So they decided to go back into the market.
Let me just interrupt you there shortly. We seem to have some audio issues from your end. We can't see you, but we cannot hear you. All right, let me begin with Arnold. Arnold, if I can, with you as well. The same question to Robert as we to sort of analyze his problem from his end. It hasn't seemed to create or that spark that demand for that particular stock for NMG.
Yeah, thank you so much. I think from where I sit, I view it from a different perspective.
Yes.
I think if you look at the general activity on the NSE, it's been skewed towards certain stocks.
Yes.
And I feel like for them, it's more of a capital preservation measure. I could be wrong, but that's what I'm reading. So it's a capital preservation measure, short term and probably long term, they may reevaluate the situation. And ordinarily, I think with buybacks, there are two reasons as to why a buyback may happen. I think Robert had mentioned something to do with how you feel your stock is valued in the market.
Yes.
I'm looking at it from the point of how is the market performing versus how does that affect my capital position. If I feel like I have enough reserve to buy back stock to preserve capital in the short term because of inherent activities in the market, then I'll do it in terms of just preserving my capital. I think for any, that would be a move to preserve capital short term. And for business continuity. I think if you look at what has been happening in the media space vis-a-vis NSE media space, things have been changing a lot. A lot is moving on digital platforms, YouTube, etc. in terms of advertising revenue. So advertising revenues have been going down. So if you look at NMG's position and how things are going on in the media industry, do you want to remain in the NSE and have your stocks going down and erode your capital, or do you want to preserve your capital by buying back your share, assessing the market, and probably reevaluating the situation? So for me, I'm reading it from that perspective.
Pretty much. Robert, let me bring you back in. We have you back on. They were buying it at 25 shillings a share. Do you think that when they bring them back finally, because we do expect that is going to happen now, do you think they will come in at a higher valuation, going by how the company has been performing? We do know that they're in a negative position when it comes to that profitability trend.
Well, Simba, it depends, because it's also at their discretion when they'll release back their shares, because they might also decide just to keep hold of them in their treasury.
Yes.
So it's up to them. So they'll decide. They look at the situation, and I think if they are to issue them, then it will be at their advantage if they issue them at a higher price, because then they can instantly book a profit on that. So the main aim of this transaction was just to increase interest, increase value of these shares, and also give back to their shareholders who have held these shares. Remember last time they actually issued a bonus of the shares. For each share you are getting at least a bonus for each share you are holding. So NMG is just trying to at least make its share more attractive for investors. So if they are to issue them once again back into the market, it will have to be at a higher price, because that's the initial target.
Pretty much. Abraham, you can read into, when it comes to share buyback, you can read into it in different ways. Number one is a company that is really not happy with the valuation of their stock at the local booths. Would you believe that at 25 shillings, that would be a proper valuation for NMG stock? And when it comes to buying them now, is it a move to sort of also reserve capital, as Arnold is putting it?
You see, I was listening to my fellow two colleagues here,
yes,
and what is apparent to us is that we really don't know why they did it.
Yes,
because it's internal to them, and you know it could range from that they are trying to preserve their capital, they are trying to increase the liquidity of their shares, they are trying to conserve cash going forward, or they could be slowly getting out of the box. It could range from all those are possibilities, and we really cannot tell. However, it's whatever works for you. Right now, you do what works for you.
Yes.
Internally, in terms of, because see, the less shares that you have out there, one, of course, it should spur the price of that share. But more importantly, also, you also have less to pay.
Yes.
Your authorized share capital is still the same, but the issued has contracted. So for me, I would be cautious to speculate as to why they did it.
Yes.
But what is for sure, there's an internal policy that there's somewhere they are going. But I think if you give it time, you'll probably start seeing where exactly they are going with this.
Yes. Yeah. Should any buyback sort of spur activity around the stock? Because then what you like to think as an investor is that there's now demand for that particular stock.
And that speculation will be driven by what the investor imagines NMG up to.
Yes.
Yeah. Based on what you imagine they're up to is what will determine whether you'll be for the share,
yes,
or against it.
Yes.
Yeah.
Pretty much. Arnold, let me bring you back to, at this point we're just speculating as well. When you look at exactly what Centum has done, Centum is also in plans actually. They're saying that they're looking for ways to buy back some of their shares on the local stock so they can create demand on the local books, because they're not happy with how the share is actually valued at. So when you look at NMG going back, that's a program that is ended. But then when you look at the reaction to the market and then you say, well, the share price actually did drop 4 days after that program ended. Is that where the speculation begins, as Abraham is saying, that until you know, that's when you will drive that demand?
Yeah, actually, that's true.
Yes.
You see, it's a very interesting balance, because on one end, ordinarily, if you look at it face value, if you look at the basics of share buybacks, it's to create demand, increase the valuation, increase your capital position.
Yes.
But that's why for me, I was reading it from a different script, because
yes,
the stock has not been blue chip level in terms of valuation in the stock market.
Yes.
And if you have a situation whereby it's continuing to go down, now what do? You could let market forces dictate what happens, but then again, what effect does that have on the general valuation of the company? Or you could take a preventive action by doing a buyback. So for me, I'm reading it from that script. I think we'll get more information as we go by, depending on how the company performs financially. We will get more information on those reasons as to why they've done it, as to how the company performs, of the general revenue streams, cost streams, etc. So for me, I'm looking at it from a capital preservation point of view. as at now.
As at now.
And yeah, as at now, yeah.
Pretty much. Gentlemen, let's clear like this. Now, for any Kenyan who's not in the know, actually just a couple of months from now, might be 2 weeks, because the National House did pass that bill that I want to talk to you about next. It will be a requirement by law that all Kenyans above the age of 18 years be members of the National Hospital Insurance Fund, NHIF, in the amendment to the NHIF Act that was approved by the National Assembly. Employers will also be required to top up contributions to those who pay less than 500 shillings monthly on the scheme. Now, members of parliament approved the changes to the NHIF Act, which will now make it compulsory for every Kenyan above 18 years to contribute to the fund 500 shillings monthly or 6,000 shillings annually for the remodeled universal healthcare, which will now include services like maternity, dialysis, cancer treatment, and surgery. Now, the 5.1 million poor households the National House Health Committee wanted to cover through the counties will have to dig deeper into their pockets to raise the 6,000 shillings annually, as the National House rejected the proposal. Now, President Uhuru Kenyatta in June appealed to lawmakers to pass the bill, which offers his administration the best chance at providing affordable health care for all Kenyans. Woo, there it is then. Robert, the feasibility of this, that's where the questions begin. Yes, on paper, good idea. But then, Robert, how? How though, Robert? Is that the question we should be asking this morning?
Well, it's going to be it's going to be really difficult. Of course, I think the aim is just to increase the pool of funds out of the NHIF scheme itself.
Yes.
Yeah, but it's going to be really difficult also to administer this, because you can imagine now they are targeting every single Kenyan who is able to at least earn an income or above, they said above the age of 25, where you're no longer able to use a parent's insurance. So they've just set such a wide net that NHIF is basically targeting all income earners, and also now on the employees, because there's also the additional burden on them. So it's going to be, I think there's also going to be, we are going to see a pushback on this, because it's also difficult both on the side of employees, on the side of SMEs, and on the side also of employers themselves. So on the feasibility of it, we'll see whether it will be implementable. We'll see whether there'll be a pushback. Maybe someone might go to court because of this, of course. But it's for this, unless we adopt a wait and see approach and see how the economy also applies.
Pretty much. All right, Abraham, let me take you through some data here. Ken Beers gave us some very interesting data this morning, especially when it comes to the state of unemployment in the country, because then they expect that everybody who's above 18 years has to be on this scheme, at least. All right? Now, for those people who have given up looking for employment in the country, they're saying 20 to 24, 363,018 as of March 2021 say, we're not looking for employment. It's very hard for us to get jobs in the country. 25 to 29, 232,146 are saying, no, we can't look for employment anymore. We've tried, we failed. Those opportunities are not there. Then members of parliament go back to the house and then they say, anybody above 18 years now has to be on this scheme. The feasibility and the reality of making sure that everybody is on that. How are they going to achieve it?
Yeah, I agree with you. It's a very good document.
Yes.
And universal health care is important. But whether we are going to achieve it this way, I think we'll wait and see.
Yes.
For several reasons. One, I don't think the law can impose on you what you possibly cannot do.
Yes.
Yeah, I cannot legislate you to do something that is beyond your ability.
Yes.
So what about those people who cannot afford? What are you going to do to them? You're going to jail them?
Is that not the question?
No, what will you do to them?
Would you say, no, you cannot be given health care if you work in a hospital?
You see, first it will be a question that you're breaching the law.
Yes.
You see, so at that point of breach, what are you going to do with those people? And secondly, what do you want them to do? You see, if you legislate something, you cannot legislate me to do something that is beyond my ability, financially or otherwise. That's number one. That's the first point. Number two, we've just added a bigger burden to the employers, and given the conditions we are in. So universal health care is beautiful, and it needs to be done. But I can see for sure, people, this will be fought. And it will be fought in court, and it will be fought on the basis of the Constitution. Because by you passing this, are you infringing on my right? Because you're saying, you're telling me to do something that I'm not able to. I mean, look at the average, that's 6,000.
And healthcare is fundamental, isn't it?
Yes, and also now,
yes,
even if you cross all those bridges, even currently, already, you saw in the media, NHIF is struggling
yes,
to pay bills. Why? Because the claims are almost surpassing the contributions.
Yes.
That's a system problem. Because
Yes.
it should never get there. That
Yes.
means the system is not working properly. Because that means we are paying things that are not actually true. But now if you calculate this, it's at 6,000 per, everybody who's above the age of 18, even if you assume a household of 5 people per person, so you talk about 10 million households. 10 million times 6,000 is what, 600 B or something
yes.
like that. So it's a lot of money, but that's not the issue. The issue is that since you've paid, then you cover me. And you see they've widened the range of. So there are also sustainability issues. So whereas the legalese of it is okay, now the economics, the economic metrics of it needs to be looked at very carefully.
And those are the
Yes,
heavy ones.
and you see, once we look at those economic metrics, it may again ask us to make further amendments.
Arnold, 2 minutes, if you can clear this. You see, the questions that Abraham is saying, well, the legalese of it, brilliant. It's a brilliant document. I mean, when you're saying you're going to cover maternity, you're going to cover cancer treatment, and that's what we need, isn't it? Especially when we're talking about that universal health care. But then, Arnold, what do you want them to do? Those people cannot pay. And what are you going to do once you mean those people cannot pay? Is that not the question we should be asking? And there are many of them, Arnold, as we talk about them. Arnold, unmute your microphone. And with that, it's good. I'm so sad that I can't actually cross over to Arnold this morning. Arnold, can you confirm you can get me? Because we're picking the last sentiments on this. What a pity. We seem to have lost Arnold at that point. All right, Robert, could you give us 45 seconds then of your last sentiments on that as well? That question that Abraham is asking, what are you going to do when you meet those people cannot pay? And what do you want them to do when they tell you they cannot be able to pay?
Yeah, thanks, Simba. So just in summary, NHIF was always an option for the people working in the informal sector. Remember, the informal sector actually employs more than 50% of the Kenyan workforce. So it should be just the structure that was there, where it was you join not on a compulsory basis.
Yes.
But those who want to join into the scheme are given the option where they contribute 500 per month. I think at that point it was fair. Now making it compulsory might stretch Kenyans a bit. But okay, the positive thing about this is that NHIF, of course, is a health scheme which you will definitely see the benefits of later on in life. But I think it can be approached in a better way, especially on the side of where you're tasking both employers and employees. Now, if you consider this for SMEs which are working on thin margins and which maybe don't have as much profits to operate with or as much cash flows, it might be a problem. But it's something that still needs a bit of relooking, and for the Kenyans who have now been forced into this might find it a bit of a challenge. Now that's where the problem is coming in. But I believe the current program, which was there where you just opt in, it was an option where you can be route. It was still working. So for the government, I think the best thing to do is not to fix something that isn't broken. And I think forcing people now to contribute towards NHIF might be a strain on the end use. Simba, that's serious.
Couldn't end it any better. Abraham, thank you very much for getting time to visit us this morning.
Most welcome.
Robert, thank you very much for taking your time this morning as well. Don't know whether we have Arnold around, but that's exactly what we have now. Take this gentleman back to the studio when they came to the studio this morning, actually, online at Metropole TV KE, across your social media platforms on YouTube at Metropole TV Kenya. Like, subscribe, comment. Good morning.